Good day, grade 8s. Today we are going to take a look at the intro of our general ledger. But first off, we're going to start with the work we did in term 1. So here we have a transaction and it says services rendered, received 500 Rand. Alright, that we know will be in our CRJ. And we know that the source document that we are going to use is either a CRR or an invoice, depending on if the business has a cash register or not. Alright, then in the first term, we did our accounting equation. So we know that because we received 500 Rand, our assets are going to increase with 500 Rand, and we are going to say that is cash increase. Then we ask ourselves, why did our cash increase? So our cash increased because we had a service rendered. So services rendered is an income, and that will be an owner's equity account. So therefore our owner's equity are also going to increase with 500 Rand, and we are going to call this services rendered, and in brackets we'll say income, or we can say current income. Alright, now the important account in grade 8 is our bank account, because we know that each transaction has an influence on our bank in grade 8. So either we will receive money where our bank increases, or we will pay something or buy something where our bank decreases. So it's important for us to ask ourselves what will happen to our bank account. Alright, so first of all, down here you see we have a T. Alright, so our general ledger are also called a T account. So there you can see a T account. And the T account has two sides. So a left-hand side and a right-hand side. But in the accounting class, we have a specific name for it. So we're not going to call it left hand or right hand. We are going to call it the debit side or the credit side. So the debit side is on the left hand and the credit side is on the right hand. Alright, so debit and credit. Okay, so each T account are supposed to have a specific name. Alright, so something that defines it. So the first one we are going to call bank. Why? Because bank is always involved. Alright, so now we're going to have bank. And now I'm going to go to this little block up here. And this little block is very important for you to study. So I'm going to tell you that assets, and bank is an asset, will increases on the debit side, and assets like bank will decrease on the credit side. So because we have received money, our bank is increasing, and we now know that our bank increases on the debit side. So on the debit side, we are going to have 500 Rand. Alright, now it's important to understand that today I'm only going to give you the basic information. So there's still more info that we will take a look at later on. But for now, we need to focus on debit and credit. Alright. Then also something we learned at the beginning of the year was the double entry principle. So the double entry principle says that for every debit, there is a credit. Alright, so we need to keep that in mind. Alright, so now we have debited bank, and now we need to give the other T account also a name. So most of the time, two T accounts are involved in every transaction. Sometimes there can be three if you, for example, bought two things from one check. But for this exercise, we'll only have two T accounts. Alright, so what do you think? Now, we should now give the other T account a name. So we are going to call it now current income, because that is what we have received, or why the business have received money, because we rendered a service. So current income. Alright, so remember I said for every debit there now will need to be a credit. Alright, so owner's equity then I can tell you will increases on the credit side, and it will decreases on the debit side. Alright, so another thing that we can now say is that income we will write on the credit side. So if we have an income account, we will credit it. Alright. Now we need to take a look at this little block, because this is also a way we can ask it. So my suggestion for you is that you always take we always ask about bank. So go to bank first and do bank first because bank is the easiest one. So because we have received money, our bank increased, and we now know that assets increases on the debit side. So the account debited will be bank, and that is an asset plus. And why did we debit bank? Because we credited current income, because that is why we have received money, and that is owner's equity plus. Alright, so there's two reasons why we debit or credit a certain account. So the first reason is the double entry principle. So because you debited or credited the other account, for example, bank increased, therefore we debited, therefore we need to credit current income. And the second reason is the type of account. So because assets are because bank is an asset and it increased, therefore we wrote on the debit side, and because current income is an income, we wrote on the credit side. All right, the second transaction we have now is we purchased stationery. Alright, so because we purchased stationery, it's in the CPJ, and it is check counterfoil. That is our source document. Alright, so remember I said we need to ask ourselves what happens to bank. So we have cash decrease, so it's minus 18, and it is cash decrease. So now we know that because cash decreased, our bank account are going to be credited with 80 Rand. Alright, so account credited is going to be bank, and that is an asset minus. Now we need to ask ourselves, what did we buy or what did we pay for? And it was stationery. Stationery is an expense, so therefore it needs to be minus 80 at owner's equity. Stationery, and in brackets we need to say it's an expense. Right, that means our other T account's name is going to be stationery, and because we have credited bank, we are now going to debit stationery. So that means the account debited are going to be stationery, and that is owner's equity minus. Alright, so now we can say, remember the previous one we said that we minus owner's equity on the debit side, so now we can say that expenses will be on the debit side. Alright, so cash decreased, bank is credited, and then stationery is also decreasing my owner's equity, and therefore it's on the debit side. If we take a look at transaction number 3, it says the owner increased his capital contribution, so therefore this will be in the CRJ. We will have a receipt. Alright, now remember we're taking a look at bank. Bank increased, so bank is going to be plus 6,000 at assets, cash increase. Therefore, we're going to say, all right, our bank account, we know we are going to debit that, so account debited will be bank. All right, and then we're going to ask ourselves, why did the business receive money? And that is because the owner increased his capital contribution, so therefore it will be plus 6,000 capital contribution. So capital contribution, and this will increase contribution. This will increase my owner's equity. So capital will be my second account. That will be credited because we debited bank, and capital owner's equity plus. Alright, so therefore we can make another thing, and we can say now that capital is also going to be credited. Alright, so why did we credit capital? Number 1, double entry principle, we debited bank. Number 2, the type of account, capital should always be credited. The last one I'm going to explain is where we purchased a vehicle. Alright, so that means, I'm just going to put this here for you to see. So that means that what happened to bank? Alright, first of all, so the journal will be CPJ, and it will be a check counterfoil. Then we need to ask ourselves what happens to bank. So bank will decrease. So therefore we will have a minus 120,000, and that will be because cash will decrease. Alright, so that means bank debited or credited. That means bank will be credited because it's an asset that are going to decrease. So over here I will then have bank, and on the credit side of bank I will have 120,000 rand. Alright, so why did my cash decrease? I bought a vehicle, and now this is important for us to go and study the type of accounts that you will find on page 55 in your textbook. So the type of account, so vehicle we know is an asset, so we can only write underneath assets. So our assets are increasing because we bought a vehicle. And what do we see now? We see now that on this side we have 0 minus 120,000 plus 120,000 is 0, and we wrote nothing in owner's equity. And remember, the accounting equation says assets needs to be equal to owner's equity. So over here now we will have vehicles which are going to increase. So that means our asset is increasing. Remember, assets increases on the debit side. So vehicles will increase, and that is an asset increasing. And our second tier account's name will then be vehicles, and we will therefore debit that. So for every debit we have a credit, and these are two assets accounts. The one is increasing and the other one is decreasing.